Hi traders, Nick here. Welcome to this trade secret tutorial on the channel Breakout. So, formed where price consolidates within two clear levels, creating a price channel. It's a basic trade setup that really comes from identifying support and resistance, and obviously the resistance level forming the top of the channel, support forming the bottom of the channel. Found in any market or time frame, so you can find it and use it anywhere in your trading. And it's most effective, as with all trades really, when the breakout is taken in the direction of the dominant trend. They are going to be the most successful of these trades. So having a look at how it is formed, so we identify the support and resistance level, and obviously what we're looking for is for the resistance level, multiple touches forming a clear layer. Now you might get some spike throughs, but it should be obvious where that layer is forming, and similarly on the other side we should see tests of the bottom creating a very clear channel. Setting our entry and stop loss, well, this is a long example. So our dominant trend is up, we've come up into the channel, we want to enter only on the break of that channel. Now the stop loss really depends on your risk appetite. Often I prefer to put it behind the back of the channel because that's really the safest place to put it, but if you've got a slightly more a riskier profile for your trading, then fine, you could perhaps put it behind an intermediate swing low, or possibly if one or two of these bars are big low test bars, then you might have some comfort and security putting your stop loss behind that bar. It's really up to you and your own risk profile. So the trade itself, we break through, we get triggered into the trade, and hopefully that runs away for a nice profit. And then finally, my own point of excellence is make sure when you're getting into the trade, and that's the important one, the into the trade bit, you are not overextended from your chosen moving average. I tend to use the 50 or the 20, but it's whatever you use, make sure you're not overextended. So let's have a look at some examples now. This is JK Oil and Gas, very clear resistance level here, very clear support level. The direction we came into it from below, so it's always more likely and stronger that we're going to break out. It's a continuation pattern in most cases, so we break out that way. Let's have a look at Elementis again. We've got a move up into the channel, test, 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 bottom tests here, and then finally we break out this way. Nice run with Elementis. Looking at the currencies, this is euro dollar on a 60-minute chart. Again, the trend is up, we come up, we form test, 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 two clear channel levels, and then we break out. Now this is one example where you might want your stop loss back behind the back of the channel, because it clearly comes up and then comes back down again in the same movement. Actually, we don't know from this bar, it could have opened, gone down and come all the way back up again, but I think it makes more sense to put it behind the channel if you can, because that gives you more security. So this is a breakout short on Euro Aussie daily. Very clear channel form here. Notice we do have a few spikes, and that will happen in currencies more often probably than in stocks, and you need to take a call on where you think that level is. Remember, as I've talked about in other tutorials, think of this more as a zone or a region rather than necessarily a strict line. I mean, it's forming a much better line on the support side, but less so on the top side. The dominant trend is down and we break short, and you see there's a lovely high test bar, so if you could have it spiked down and come back up again, but once that bar is formed there, then I think I wouldn't have any hesitation putting my stop loss here and re-entering the trade short at this point if I wasn't already in it. Dollar CAD on a 4-hour chart, over-earning trend is down, multiple tests of the resistance level, more tests even still of the support level, and again, depending on where you could have entered here, stop loss up here, or entered here and stop loss in this area. Oh, yeah. Okay, so channel breakout summary. It's a strong coiling chart pattern. What's happening when this is consolidating is it's building up energy ready for the next move, so it can be quite a strong breakout pattern. Found in all markets and time frames, better when taken in the direction of the dominant trend, as with all trades really. Only enter on the break of that support or resistance level. You want confirmation that the channel has been broken. And point of excellence, just watch for overextension from your moving averages, whichever they are on entering of the trade. Okay, thanks very much.